So this is an emergency video. This is not the video I wanted to post today. There's not gonna be any dramatic music, there's no stories, there's no intro, and there's no sponsors. The world is afraid of World War III. So I just want to take a moment to slow things down for anyone who's feeling worried or overwhelmed.
But as we're starting to see throughout 2025, the bigger concern is beginning to be stagnation.
But the real reason you want to pay attention to this isn't just because of profits, it also has to do because of power.
Time is the most valuable asset, and I save it for you. My name's Jason, I'm your host. Welcome to the week in YouTube Finance.
Realtors have hit the panic button.
Prices, they are slowing down quickly, and in several major markets, they are now lower compared with a year ago.
People can't afford the mortgages, prices are too high, there's more inventory, but it's become unsustainable.
There's downside risk in this market.
Okay.
Prices can fall.
What's up, you guys? It's Graham here. So it finally happened. For the first time since the great financial crisis, the housing market has officially flipped, and sellers are beginning to panic. Like, as of now, there's an estimated 34% more homes for sale than there are offers. Sellers outnumber buyers by a record 500,000, which is the largest imbalance on record. Or I guess in other words, this is now the very beginning of a buyer's market where sellers are forced to negotiate down, homes are sitting on the market for longer, and in 61% of the US, prices are starting to drop quite dramatically depending on where you live. That's why we need to talk about exactly what's going on, which areas are seeing the biggest price reductions, or price improvements as realtors like to say, what analysts believe is most likely going to happen over the next year, and then finally what this means for you watching, because there could be some very good buying opportunities coming up very soon if you know what to look for. Although before we start, as usual, if you appreciate videos like this where we just cover the facts, it would mean the world to me if you hit the like button or subscribe. Yes, I know it's annoying when I ask for it, but it does sincerely help out a lot, and as a thank you for doing that, here's a picture of a squirrel. So thanks so much, and also big thank you to Surfshark VPN for sponsoring this video, but more on that later. Alright, so in terms of the housing market, over the last year, this was the biggest issue keeping prices high. Frozen inventory. See, here's the thing. Up until recently, the housing market was pretty much at a standstill, with inventory and transaction volume falling to some of the lowest levels ever in history. Why? Well, if you bought a home between 2020 and 22, you were able to lock in a fixed-rate 30-year mortgage under 3%, or in some cases as low as 2.5%, meaning any lucky buyers are essentially just getting free money to go and buy a house when you account for inflation, and this pushed up home values to insane levels. However, like you would expect, this sort of free money eventually has to go away, and beginning in 2023, the Fed was forced to raise interest rates at the fastest pace in decades, which pushed mortgages past 7%, a level we hadn't seen, by the way, since before the 2008 crash. In fact, homes were so unaffordable that millions of buyers waited on the sidelines for a correction to happen, but home prices never went down. How was that possible? Well, at the same time that buyers waited on the sidelines, sellers pulled back too, and anyone with a 3% mortgage decided it wouldn't be worth it to sell, so they decided not to list their home and take it off the market, resulting in a term called golden handcuffs. Of course, regionally, some markets did begin to cool off, with places like Northport and Tampa seeing inventory surge 60 to 68% year over year, but other areas kept climbing, like New York City, Chicago, and Cleveland, with annual gains of 6 to 8% because they still had more demand than supply. But as we're starting to see throughout 2025, the bigger concern is beginning to be stagnation. See, here's the thing. Even though median home prices are still higher year over year, the pace at which they're increasing is beginning to slow down by a lot. For example, even though we saw 15 to 20% gains throughout 2021, today national home prices have only increased 3 to 4%, with spring price growth having slowed down for the 11th straight month. In fact, by March of this year, national home price gains were down to nearly zero, suggesting that buyers are now getting the upper hand. Although once you start to dig a little bit deeper, you'll begin to realize that this is what we're currently up against. Sales prices soften over the next few years, which is probably something healthy for the entire economy. Although definitely let me know what you think down below in the comments. As always, I will do my best to read and reply to as many of you as I can. And hey, if I missed anything, feel free to let me know down below. Thank you so much, and until next time.
Special thank you to my secret client for allowing us to film in the backyard today.
The American economy is being challenged to a war, but probably not the way you think. I'm not talking about a world war, and I'm also not talking about a trade war. I'm talking about the war over oil, which is quietly starting to accelerate. And the reason you want to pay attention is because it can impact gas prices, stock prices, and our economy at large. What do I mean? It's OPEC versus United States oil companies fighting over who will control the world's oil. And if you have no idea what that means, don't worry. I'm gonna break it all down in this video, starting by explaining what is OPEC versus US shale. Number 2, explaining what's happening in this oil war right now. Then going into number 3, why this is so important because of how oil can equal power. Number 4, the risks of everything going on in the oil war. And then number 5, how does this affect you and where's the opportunity for you? So let's break this down. Let's start with the basics. OPEC is a group of oil producing companies like Saudi Arabia and Russia. And the reason why this is so significant is because they control 40% of the world's oil supply. Do you think that OPEC is going to continue pumping the market with more oil? Or do you think they're going to pull back and the price of oils are going to rise and that's going to benefit US shale companies? I'd love to hear your thoughts because a lot of things can happen. Let me know down in the comments. I'm looking forward to reading what you have to say.
So this is an emergency video. This is not the video I wanted to post today. There's not going to be any dramatic music, there's no stories, there's no intro, and there's no sponsors. Now, I might have titled this video something sensational to grab your attention, but that was on purpose. Because when the world feels like it's on fire, it's important to stay calm and level-headed. And right now, there's a serious conflict between countries. There are casualties, there's going to be scary headlines, scary news reports, and the markets are going to be on fire. The world is afraid of World War III. So I just want to take a moment to slow things down for anyone who's feeling worried or overwhelmed, because when people are losing their lives, the last thing they probably want to think about is money. But when fear takes over and markets do crazy things, we can make mistakes, especially with our finances. And as someone who's really passionate about helping people and sharing financial education, I think this is the right time to put out this reminder about staying calm, staying invested, and staying smart. So I wanted to interrupt my normal schedule. This is not the video I was going to release today, but I want to share a few things that I think are incredibly important right now that will hopefully help you out. This information I'm about to share is something I've spent a long time researching because this is not the first time the world was in danger of global conflict. And it's definitely not the first time that investors asked, what happens to the market during war? And I think the answer might surprise you. Historically, markets don't crash the way people expect during major conflicts. In fact, in a lot of cases, they actually recover really fast, sometimes even going up during the war itself. But let me give you a couple examples. After Pearl Harbor in 1941, the stock market dropped about 3% the next day and then fully recovered within a month. All it took was 1 month to recover from one of the biggest conflicts in the US. Now, during the Cuban Missile Crisis, which happened in 1962, when the world was literally on the edge of nuclear war, the market went down about 7% in about 4 trading days. And then it recovered in just 10 to 12 days. Not that my opinion matters, I'm no geopolitics expert, but I am optimistic, and I don't think we're gonna get World War III over what's happening right now. That's because I don't think Iran has enough full support to start one. China and Russia are too busy with their own problems. Russia is busy with Ukraine, China's busy fixing its own economy, and the US is just trying to stay out of geopolitics. And I'm hopeful, and I'm looking on the bright side, but the ultimate takeaway is that you don't need to do anything fancy, you just need to not panic. So I hope this video helped you out a little. As always, I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. I'd love to see you back here next week with my regular video. With that said, I'll see you soon. Bye-bye.
Well, obviously a pretty heavy subject, and I think Andre approached it in a very intellectual, intelligent, financial point of view. So thanks for that. So what do you think? What about you guys? Are you dollar cost averaging? Are you with VOO? Drop a VOO down in the comments below if you are. Thanks. Do me a favor and hit that YouTube tip jar. Hit that like button. Like that. Thank you so much. And I would love it if you subscribed. So help me out. Talk to you soon.